Hey everyone, the world's biggest economy just contracted, inflation is back near target, and Wall Street suddenly adores government bonds again. So let's spend the next couple of minutes unpacking why these US crisis signals could send capital either into the safest treasuries in years, or straight into Bitcoin. We start with the numbers headline. CPI has cooled to 2.3%, the PCE index backs that up, and even real-time trackers flash sub 2%. Price stability looks almost achieved, yet GDP slipped 0.3% in Q1, the first dip since 2022, so the Federal Reserve sits in a genuine bind. Keep policy tight and risk recession, or pivot and risk reigniting prices. Futures markets are betting on the pivot. Right now, the CME FedWatch tool prices 4 quarter-point cuts between June and October, which would pull the policy rate back below 4% by year-end. Cheaper money usually chases yield, and that's traditionally bullish for risk assets like Bitcoin. But here's the twist we can't ignore. Despite the expected cuts, 10-year treasuries still yield about 4.4%, roughly 2% after inflation, offering the first compelling real return on risk-free paper in years. When safe cash flows look that good, some liquidity inevitably drains from speculative markets. At the same time, those high yields also jack up Washington's interest bill and spotlight the record federal deficit. Every uptick in debt stress reinforces the idea that Bitcoin, with its fixed supply, is digital hard money the government can't print. That dual identity, tech growth asset and store of value hedge, has kept BTC buoyant while equities wobble. So we find ourselves watching two forces collide: higher real yields tempting capital back into bonds, and structural debt worries nudging savers toward an unprintable asset. Which side wins hinges on how deep the growth slowdown gets and how quickly the Fed blinks. If recession fears escalate faster than yields fall, we could see a flight to treasuries. If debt concerns dominate, Bitcoin's digital gold narrative tightens its grip. Bottom line, the same crisis signals rattling the US economy can either crown treasuries king again, or make Bitcoin the ultimate life raft. We'll keep tracking the data and share what we find, so if you want straight-to-the-point macro and crypto coverage, hit like, subscribe, and we'll see you in the next one.